Hello everyone, welcome back to the channel. So today we're going to find out if it's possible for someone with zero finance knowledge to become a finance YouTuber using nothing but ChatGPT. Now, if you don't know what ChatGPT is, it's essentially artificial intelligence that produces answers to commands that you provide. You ask it to do something and it does it. An example would be write a 250 word song about a dog. And as you can see, ChatGPT writes us a 250 word song about a dog. It's gone completely viral online as people have been using it to generate code for apps, to write essays for college assignments, and a whole pile of other really interesting use cases. The use case that I'm most interested in is using ChatGPT for content creation. What would happen if you told ChatGPT to write an entire video script for a finance topic? What would the quality of the script and its contents look like? Could you, in theory, know nothing about finance and simply use ChatGPT scripts to produce finance content? To answer those questions, I'm going to tell ChatGPT to write 7 video scripts, with each script covering a popular finance topic. I'm then going to present the script to you, the viewer, as I would if it were a script of my own. That way, you'll get a feel for how someone with nothing but confidence and presentation skills could act as if they were a subject matter expert. All of these scripts are totally unaltered. I haven't made any edits to the results that ChatGPT produced. And for context, it took me between 5 and 10 minutes to come up with all of the script topics and to get ChatGPT to produce the scripts. Each topic will be timestamped below, and without further ado, here's what ChatGPT came up with. Topic 1, dividend stocks. Dividend stocks are a type of investment that pays regular cash distributions to shareholders. These distributions, known as dividends, are typically paid out on a quarterly basis and are often a significant source of income for investors. One of the key advantages of dividend stocks is that they provide a steady stream of income. Because dividends are paid out on a regular basis, they can help investors generate a consistent return on their investment. This is particularly useful for investors who are looking for a source of income in retirement, or for those who simply want to supplement their existing income. Another advantage of dividend stocks is that they can offer a hedge against inflation. Because dividends are typically paid out in cash, they are not subject to the effects of inflation. This means that over time, dividends can maintain their purchasing power even as the cost of goods and services increases. Despite their advantages, dividend stocks are not without their risks. One potential downside is that dividends are not guaranteed. If a company's financial performance deteriorates, it may decide to reduce or eliminate its dividend payments. Additionally, because dividend stocks are typically found among mature, established companies, they may not offer the same potential for capital appreciation as growth stocks. Overall, dividend stocks can be a valuable tool for investors who are looking for a steady source of income. While they may not offer the same potential for growth as other types of investments, dividend stocks can provide a valuable source of income and a hedge against inflation. Topic number 2, pensions. Pensions are a type of retirement savings plan that provide regular income to individuals after they retire. Pensions are typically funded by contributions from both the individual and their employer, and are designed to provide financial security in old age. Pensions can come in many forms, including defined benefit plans and defined contribution plans. Defined benefit plans guarantee a certain level of income in retirement, while defined contribution plans allow individuals to contribute a certain amount of money each year, with the final payout depending on the performance of the investment. One of the key advantages of pensions is that they offer a steady stream of income in retirement, which can help individuals maintain their standard of living. Additionally, many pensions offer tax advantages, which can help individuals save money on their taxes. One of the challenges with pensions is that they may not provide enough income to maintain the same standard of living in retirement as individuals had during their working years. This is particularly true for individuals who have not been able to save enough money in their pension plan, or who have not been in the plan long enough to build a significant balance. To address this challenge, individuals can take steps to ensure that they are saving enough money in their pension plan, and can consider other retirement savings options such as individual retirement accounts or IRAs and 401k plans. Overall, pensions can be a valuable tool for ensuring financial security in retirement, but it's important for individuals to carefully consider their retirement savings options and make a plan to ensure that they have enough income in their golden years. Topic number 3, index funds. Index funds are a type of investment that tracks the performance of a specific financial market index, such as the S&P 500. Unlike actively managed funds, which are run by a team of professional investors who try to outperform the market, index funds simply aim to match the performance of the underlying index. One of the key advantages of index funds is that they are typically low cost and tax efficient. Because index funds don't require a team of professional investors, they generally have lower fees than actively managed funds. Additionally, because index funds simply aim to match the performance of the underlying index, they tend to generate fewer capital gains, which can result in lower taxes for investors. Another advantage of index funds is that they provide diversification. By investing in a broad range of securities, index funds can help reduce the overall risk of an investment portfolio. This is particularly important for individuals who may not have the time or expertise to actively manage their own investments. Despite their advantages, index funds are not without their drawbacks. One potential disadvantage is that they may not outperform the market. Because index funds simply aim to match the performance of the underlying index, they will never outperform the market in a rising market. Additionally, index funds may underperform in a falling market, as they will be weighted towards the declining securities in the underlying index. Overall, index funds can be a valuable tool for investors who are looking for low-cost, tax-efficient investments that provide diversification. While they may not always outperform the market, index funds can be an important part of a well-rounded investment portfolio. Topic number 4, real estate investing. Real estate investing is the practice of buying, owning, and managing real estate property with the goal of generating income or capital appreciation. Real estate investors can generate income through rental income, or they can generate capital appreciation by buying properties that increase in value over time. One of the key advantages of real estate investing is that it can provide a steady stream of income. By owning rental properties, investors can generate regular rental income, which can provide a useful source of income in retirement or to supplement existing income. Additionally, real estate can provide tax advantages, such as the ability to claim deductions for expenses related to the property. Another advantage of real estate investing is that it can offer a hedge against inflation. Because real estate tends to increase in value over time, it can maintain its purchasing power, even as the cost of goods and services increases. This makes real estate a potentially attractive option for investors who are looking to protect their wealth from the effects of inflation. Despite its advantages, real estate investing is not without its risks. One potential downside is that real estate can be a highly illiquid asset. Because it can take time to buy and sell real estate, investors may not be able to access their funds quickly if they need them. Additionally, real estate investing can be complex and time-consuming, and it may require a significant amount of capital to get started. Overall, real estate investing can be a valuable tool for generating income and protecting wealth, but it's important for investors to carefully consider the risks and rewards before making a real estate investment. Topic number 5, best stocks to invest in. When it comes to investing in stocks, there is no one-size-fits-all answer to the question of which stocks are best to invest in. The best stocks to invest in will depend on a variety of factors, including an investor's financial goals, risk tolerance, and investment horizon. One of the key things to consider when choosing stocks to invest in is the financial health of the company. Investors should look for companies that have a strong track record of profitability, as well as a solid balance sheet and cash flow. Companies with a strong financial foundation are more likely to be able to weather economic downturns and continue to grow their business. Another important factor to consider when choosing stocks to invest in is the industry in which the company operates. Investors should look for companies that are well positioned within their industry and have a competitive advantage that allows them to thrive in their market. Additionally, investors should consider the growth potential of the industry as a whole, as well as any potential risks or challenges that may affect the industry. Finally, investors should consider their own financial goals and risk tolerance when choosing stocks to invest in. While some investors may be willing to take on more risk in pursuit of higher returns, others may prefer to focus on more conservative investments that offer a steady stream of income. Overall, the best stocks to invest in will depend on an individual investor's unique financial situation and goals. By carefully considering the financial health of the company, the growth potential of the industry, and their own financial objectives, investors can make informed decisions about which stocks to invest in. Topic number 6, the global housing crisis. The global housing crisis is a widespread problem that affects millions of people around the world. It's characterized by a shortage of affordable housing, rising housing costs, and a growing number of people who are unable to access adequate housing. The root cause of the global housing crisis is complex and multifaceted. In many cases, it's the result of rapid urbanization urbanization and population growth, which has put pressure on housing markets and made it difficult for people to find affordable places to live. Additionally, rising income inequality and inadequate government policies and regulations have contributed to the crisis. The consequences of the global housing crisis are far-reaching and damaging. In many cases, people are forced to live in overcrowded and unsafe housing, or are forced to spend a significant portion of their income on housing, leaving little money for other necessities. This can have negative effects on health, education, and overall quality of life. To address the global housing crisis, governments and communities must work together to implement policies and programs that increase the supply of affordable housing and address the underlying causes of the crisis. This may include investing in social housing, implementing rent control measures, and providing support to low-income households to help them afford housing. Overall, the global housing crisis is a complex and pressing problem that requires urgent attention. By taking action to increase the supply of affordable housing and address the underlying causes of the crisis, we can help ensure that everyone has access to safe and affordable housing. Topic 7. Cryptocurrency investing. Cryptocurrency investing is the practice of buying and selling digital currencies such as Bitcoin and Ethereum with the goal of generating a profit. Cryptocurrencies are digital or virtual currencies that use cryptography for security and are decentralized, meaning they are not controlled by any government or financial institution. One of the key advantages of cryptocurrency investing is the potential for high returns. Because cryptocurrencies are relatively new and still emerging, they can be highly volatile and offer investors the opportunity to generate significant gains. However, it's important to note that cryptocurrency investing also carries a high level of risk, and investors could potentially lose all of their investment. Another advantage of cryptocurrency investing is the ability to access a global market. Because cryptocurrencies are decentralized and not tied to any particular country or economy, investors can easily buy and sell cryptocurrencies from anywhere in the world. This can provide investors with a level of flexibility and accessibility that is not available with traditional investments. Despite its potential advantages, cryptocurrency investing is not without its challenges. One potential downside is the lack of regulation in the cryptocurrency market. Because cryptocurrencies are not subject to the same regulatory oversight as traditional investments, there is a higher risk of fraud and other types of criminal activity. Additionally, the volatility of the cryptocurrency market can make it difficult for investors to predict the future value of their investments. Overall, cryptocurrency investing can be a high-risk, high-reward opportunity for investors who are willing to take on a high level of risk. However, it is important for investors to carefully consider the potential risks and rewards before investing in cryptocurrencies. So, those are the 7 video scripts that ChatGPT produced. I have to say, I was pretty impressed with the overall quality of the information and the flow of the scripts themselves, even if there was a bit too much repetition at times. The main points of each topic were mostly covered, which is impressive considering I specified a 250 word limit. You could definitely use these scripts for content, not only on YouTube but also on TikTok and Instagram as well. The scripts did lack a bit of personality and the information was very broad. However, if you gave the AI more specific detail about what you wanted, I'm sure that could be overcome. The information was also largely specific to the US as well. You could also spruce up the language a bit and integrate some examples and B-roll footage to help make it feel more unique. As for how I feel about this as someone who has a finance background and as someone who writes scripts for finance videos, it is what it is. I'm more so just making this video to make you aware that 100% AI scripted videos are going to happen, not just in finance but in every niche. The barriers to entry for content creation are getting lower and lower, and you as a viewer need to take care when deciding who to listen to. To be fair, I would much rather you listen to an AI scripted video on a finance topic than some random pretend finance creator who somehow has influence with some of the worst takes around. Well, let me know what your thoughts are on ChatGPT. Do you love it, hate it, or are you indifferent? What did you think of the scripts that were produced in this video? For my regular viewers, would you be able to tell the difference between the AI script and my own content? Let me know in the comments. Thanks very much for checking out this video, and I'll see you in the next one. Cheers.